Big moves may be on the horizon. President Trump is reportedly considering replacing Jerome Powell as Fed chair before his term ends. The Federal Reserve has kept interest rates steady at 4.25 to 4.50%.
But with inflation lingering and the 2024 election in the rearview, President Trump appears ready to reshape monetary policy.
By naming a new Fed chair, months ahead of schedule.
If that happens, what will it mean for your wallet, your home, and your stock portfolio?
Markets expect a Trump-appointed Fed chair to cut rates fast.
That could mean lower borrowing costs, a boost in the stock market.
But also a potential return of inflation.
The dollar could weaken.
Wall Street might rally.
But inflation could rise, and faith in the Fed's independence might take a hit.
Some economists even warn of a global currency war. Rate cuts can temporarily boost consumer spending and business borrowing.
But if inflation comes roaring back, it could lead to long-term instability.
For the economy, it's a risky balancing act. Mortgage rates, which are now hovering around 6.87%, might drop if the Fed cuts aggressively.
That sounds great. But will it solve the housing crisis?
Millennials, who've faced soaring home prices and brutal interest rates, are still squeezed by low supply and affordability issues.
So yes, lower rates help, but they won't fix everything.
Here's the bottom line.
Rates are steady now, but a change at the Fed could trigger cuts.
Markets may rise at first, but inflation and volatility are real risks.
Millennials might benefit in housing, but only slightly unless supply improves.
The independence of the Fed is at stake, and that could impact the global economy.
What do you think? Should Trump replace Powell? Would you welcome lower interest rates, or are you worried about inflation? Drop your thoughts in the comments, and if you found this video helpful, give it a thumbs up, hit subscribe, and ring the bell for more straight talk on money, markets, and power.